Good morning, good evening, good afternoon, wherever you are, whenever you are. This is Ryan Derks with another Derks portfolio update for clients. Before I get into this, two things as always. First, this is not investment advice. If you want investment advice, you need to call me, email me, get hold of me directly, and we can talk about investment advice. Secondly, um, the reason I've been doing these videos lately is I feel like there's so much important information out there, but it's coming by and going so quickly, and there's really no in-depth discussion of what this stuff actually is. And so I hope that you get a little bit of benefit or value out of this. And please comment. This is on Twitter, Facebook, YouTube. You guys comment. I love commenting back with you. So let's get into this. This is about commercial real estate, crash or nah. So, um, something that has been talked about a lot in the last week and a half, or maybe 2 to 3 weeks, really, commercial real estate. It seems like every day there is a new headline warning us right here. See, look at this. You just type in commercial real estate to Google News, and you get all sorts of fear and mongering and so on. There's a huge crash on the edge. It's about to happen. Here's CNN. Commercial real estate is in trouble. Why you should be paying attention. America's offices are near half empty. That could be the next big risk for banks. So let's take a look at some of the facts. According to CNN Business recently here on this article, banks are cutting back on some commercial real estate lending. So allegedly, let's see here, they are worried about the risks associated with this sector and they don't want to get caught in another subprime mortgage crisis. So, of course, there are some red flags out there. Let's look here. Recently here, California-based Blackstone, they sold an office building for 40% less than what they bought it for just 9 years ago. And that, like I said, almost 50% off. That's a huge loss. And there are more examples of this across the country if you just do a Google search. But let's not jump to conclusions just yet. This does not necessarily mean that the commercial real estate is about to collapse. It is worth noting, though, that this sale took place specifically in California. And I'm thinking that this whole this commercial real estate drama is probably more focused in certain cities across the country rather than the whole country. But you still, people are still asking, is this a market that's about to collapse, or is this like a blip on the radar? Let's not forget here, interest rates are rising quickly. And there is right here, Bloomberg has a pretty good article. Over 1.5 trillion of outstanding debt on commercial properties just in the U.S. This debt is only getting bigger, and it's only a matter of time before something gives, according to Bloomberg. Especially considering that interest rates are multiples higher now than when these buildings were bought, and rates look to be even higher here in the near future when refinancing time comes around for commercial real estate. And if I'm not mistaken, I believe it's every 5 years that commercial real estate holders have to refinance those loans at current rates. So if you bought your, again, let's look very quickly here at, oh, I don't have it on here, sorry. But interest rates over the last 4 years were near zero. And so anyone that bought a place in the last 4 years, essentially, is going to have to refinance soon at a much higher rate. So now let me show you this. With that said, you guys know I show you get this Twitter account frequently, but sorry, the guy's got a lot of great content. Kobayashi letter. So Kobayashi letter is far more pessimistic about what's going on. Let me read this thread to you. A major problem has surfaced. 1.5 trillion in commercial real estate debt will mature by 2025, while interest rates have skyrocketed. But there's an even bigger problem. Office vacancies just hit a record high. The debt crisis on offices that no one wants. So he says here, typically when commercial real estate debt is refinanced and maturities are extended. Okay. However, these loans are not typically accompanied with the fastest raising interest rate in history. For example, interest rates on mortgages have more than doubled in just 2 years. Yeah, this is what I was about to pull up, but I didn't have. So you can see how quickly those interest rate monthly payments are going to go up. Smaller banks have taken on a higher percentage of commercial real estate loans. While we recently published an analysis on this topic, new data has emerged. Small banks held just 17% of these loans in 2017. New data shows that small banks now hold 27% of commercial real estate debt now. So you can see it's growing on small banks. All right, so looking at the breakdown by sector, it's even more alarming. Small banks hold 46% of retail loans and 30% of office loans. This comes after the largest banking crisis in '08 that had multiple regional banks. We have yet to receive the data on Silicon Valley's collapse and how they were affected with commercial real estate. So Kobayashi is really highlighting how a lot of regional banks have a lot of this debt. Meanwhile, office space available for lease in the U.S. just hit a record high at 16%. Many cities are seeing much higher rates. In Chicago, the vacancy rate is at 20%. In San Francisco, 13 tech companies have 3.5 million square feet of space available for sublease. And let me interject right now. Just this morning, Zero Hedge reports San Francisco has 30% vacancy rate across the city with their office real estate. That's a pretty damn big number. So Kobayashi continues, a couple more tweets here. New research suggests that as much as 330 million square feet of U.S. office space will be vacant by 2030. This would increase the vacancy rate by 55%, by current levels. Remote and hybrid work trends are the primary drivers of this shift. Now, again, that's speculation, but it's very, very possible. To put this all together, and you have a he says, put this all together and you have a debt crisis for commercial real estate that won't even be used. Vacant office buildings mean less revenue for commercial real estate developments. Refinancing and even making payments on these properties will be incredibly difficult. Due to recession worries, tech layoffs have accelerated this year, blah, blah, blah. So he's got an interesting angle there. However, with that said, all right, let's hear the other side of this. Blackstone, the bank that just reported, they're reporting earnings this week, and they're expected to report massive inflows of new deposits. They've just raised a $30 billion real estate fund. So if things are so bad, why would Blackstone be raising so much money, and why would people be giving them that much? So now look, I know a lot of you are skeptical. I'm skeptical. I don't know whether to make heads or tails. I know that there's a good argument, and that's fair. But let's be wise here. Approach this with some critical thinking, and not forget there's always two sides. So, like I said, I don't have a good answer. I think the best thing, honestly, I think what people are getting very nervous about, and rightfully so, and I'm going to end the recording with this. I think it's actually, rather than the whole country is going to be terribly affected, I think it's going to be big cities like Chicago. It's no secret that big cities like San Francisco and Chicago have been extremely soft on crime in the last few years, and people are bailing. Walmart just released a press release just this week. They're closing, I think it's four Walmart locations in Chicago because people are shoplifting so badly that they're losing money. When have you ever heard of Walmart losing money? Not only that, but let me play this, and I'm going to end the video on this clip here. This guy has a really good little insightful monologue here on how much crime has been affecting San Francisco. He starts off talking about Whole Foods in San Francisco has shut down. That combines with CVS, multiple CVS and Walgreens locations have shut down, and it's because there is so much shoplifting and so much crime and so much homelessness that they're all saying, no, we're done. So hear this guy out, and then we'll wrap this up.
This week saw big announcements from major retail chains that could mean serious trouble for $11 trillion of commercial real estate and the banks that need it. Yesterday, Whole Foods closed its flagship San Francisco store after just 1 year, citing employee safety, meaning theft, violent crime, bathrooms full of needles. Meanwhile, Walmart is closing half its stores in Chicago, also citing crime and theft. Walmart said they were losing tens of millions on the stores and noted that they've never made money in Chicago after 17 years of trying. Walmart also closed its last remaining stores in Portland, laying off 600 workers after, quote, record-breaking thefts. The nearby Nike store was also shuttered after mass shoplifting, including 15 overnight break-ins in 2 months. That's about one every 4 days. You'd have to hire a guy just to tally up what was stolen out of the storeroom every night. This shouldn't have been a surprise. In December, Walmart and Home Depot CEOs both warned that retail theft was hiking prices and closing stores. Home Depot said retail theft is, quote, spreading faster than COVID. The epicenter is big cities, whose administrations fell apart during COVID. Lockdowns immediately started driving people out of the cities because remote workers no longer wanted to live in expensive and increasingly crime-ridden hellholes. At one point, it cost 10 times more for a moving truck from California to Texas than the other way around because nobody wanted into California, but a whole lot of people wanted to move out. But the stores held on, hoping things might go back to the way they were. Now they're giving up hope. San Francisco is particularly bad. The crime was front and center last week when the founder of Cash App, Bob Lee, was stabbed to death on a San Francisco street. He'd actually moved to Miami to escape San Francisco's crime, but was back in town for a one-day meeting. Now, regular people have had enough. They are getting out before their house prices crash. They're already down 200,000 across San Francisco. The city itself is draining at a record speed, turning San Francisco into a ghost town. 29.5% of offices in San Francisco at the moment are empty. That's almost 1 in 3. Pre-pandemic, that was 3.6%. You had to sell your firstborn to get office space in downtown San Francisco. There's now over 27 million square feet of empty office space, with millions more coming up for renewal where the tenant may just walk away. One major developer in San Francisco just walked away from an $84 million project they bought in 2019. They just gave it back to the bank. Gap sold their $80 million building for a 40% haircut, and another $250 million project is getting bids about 1/4 pre-pandemic price. That's a 75% haircut. In other cities, it's not much better. Bloomberg says nationwide vacant space is at a record high, almost 20%. So 1 in 5 offices in America right now are empty. And so just a month after the bank runs, we've already got a new perfect storm on the horizon.
Okay, I'm going to pause it right there. That kind of gives you an idea of what that guy was talking about. And if you guys aren't familiar with this Whole Foods situation I mentioned and that he mentioned, check this out. This is a video of literally right out front of that Whole Foods at nighttime. This thing went viral. Now, this is not even the original video. I just Googled it real quick to find this. But imagine would you go to Whole Foods if this is what it looked like near it? This is drug addicts, homelessness, and like, look, I don't hate any of these people. You feel terrible. You hope that they can find help and be productive people again and, enjoy time with their family and friends. But no wonder Whole Foods is going under in all these various cities in San Francisco or Chicago or whatever. The amount of crime, homelessness, drug addicts, like, it's terrible. So something's got to change. But you guys, that is it for right now. Like I said, use your best judgment. Send me a reply in the comments, and I'll talk to you later. See ya.